Hey, good morning, everyone. This is Futures Breezio. It's 11:13 a.m. on Wednesday, November 29th, 2023. Hope everybody's having a great week so far. A little bit quiet in the markets this week. I think a little, post-Thanksgiving hangover, just waiting for some news and things to change. But I did want to highlight a trade that I took yesterday and closed out yesterday in natural gas futures, which is the only I only took two trades so far this week. I'll talk about both of them. So, and on that note, as I mentioned in my last video, I'm not trading Forex anymore. And this is, part of my development in psychology that I have to now adjust to only taking a limited number of trades when my setup appears. When I was trading Forex, which is another reason why I kind of had to separate myself for whatever reason, I was looking at 10, 12 Forex pairs, and every day I was pretty much taking at least one trade, if not multiple trades per day, and a lot of them wouldn't work out. So now that I'm trading futures, I'm really, have a very limited markets I'm looking at, and I'm trying to be disciplined on the strategy and setup. And so that's part of something that, I'm developing, is to make sure that I'm only taking setups that meet my criteria and my setups, and, using the indicators I've chosen to use, and also to, keep an eye on the fundamentals and the news that can help drive some of these moves. Today's Wednesday, and I've only taken two trades this week. I probably, if I was still in Forex, I'd probably be at, at least 10 trades by this time, at least a few a day. And so that's a sea change for me. And, that's part of the psychology part of it. And, it's worth it, because this one trade that I took, was about a 5-6% gain in my account. So even if I didn't take another trade the rest of the week, that'd be a pretty good week. If you increase your account by 5 or 6% in 1 week, that's pretty good. People would like to do that in a month sometimes, let alone in a week. So, that would be 20% a month. But anyways, if the setups come, I'll take them. If not, if there's no more, then that's fine too. It also keeps me away from having to stare at charts all day too. So anyways, getting to this, so this is natural gas futures, the January contract. And basically, here we are on the 1 hour chart and the 4 hour chart. We can clearly see we've been in a very nice downtrend here. And so what I saw here, and again, guys, what I'm using for indicators is just the MACD, 2-line MACD without the histogram. I took the histogram off. I did add the 0 line here. And this is the 200 period simple moving average, which I like better for this strategy than the exponential, because it's a little bit smoother and it doesn't quite hug price so much. So it's a little bit better, in my opinion, than the EMA, but that's a personal choice. And I'm basically just using like the 30-minute, 1 hour, 4 hour, for analysis, or basically the 1 hour and 4 hour for analysis with an entry on, say, the 30-minute to 1 hour. And, these are designed to be day trades to maybe short-term swing trades, and that's it. They're not scalps. I usually will hold these at least 1 day. Because of the margin requirements in these futures markets for if you hold your trade overnight, I don't generally tend to like to hold them overnight, because it just eats up a lot of margin in case I want to take something early the next day. But my account's suitable enough where if I wanted to, I could hold it overnight. But generally, like I said, I like to just exit these trades, during the afternoon. So anyways, what we had here is, again, we see this downtrend, and we can go down to a 30-minute, and you can see right here, the MACD, we had a crossover signal right here, which is, where I took the trade. Probably on the next candle right here, and you see I exited down here. This is drawn on my broker's chart, and price did go down a slight bit more and then just kind of went sideways. This is all the overnight session, and then here we are where we're at today. So if I had held this during the overnight, I probably would have grabbed a little bit more, but it's again, this wasn't really worth the holding as far as I was concerned. So you can see it's a nice trade. I said this was about a 5 or 6% gain in my account on this, and it was pretty good. Now, if you back up a little bit here and you look right here, there was another signal to go short right here. Okay, now if you had taken this one, if I had taken it at this point, you can see price made one more run back up to the moving average, and then we got this second signal. So I didn't take it right here. If I did, I probably still would have been fine, although it would have not ended up being any better trade than the one I took, because if you look at where this signal occurred, it was only slightly higher than where I actually took the trade. So there really wouldn't have been any benefit. But I would have put my stop above this previous swing high, which would have given this plenty of room. So I would have gone into a little drawdown, but eventually it would have fallen. And if we go to the 1 hour chart, this is why I like to use the 1 hour a little bit more, because as soon as you start going to the shorter time frames, you're going to have more false signals. So you can see on the 1 hour chart, we did not get that first signal. Okay, that was right in here. We didn't get that first signal. You can see the MACD was still basically going up. So this better signal was actually on the 1 hour, which was right here, which is the one I took. Okay. So, which is again, guys, why I said I don't like to go too short on these, even though these are day trades. If you use these tools properly, you can still get good trades. This indicator is still sensitive enough to give you good trades. And so ideally, what I like to see with the MACD trades is, in the case of a downtrend, I want to see it get up to or above the zero line. Those are the best entries. Now, depending on the volatility of the asset, you might not get the on the 1 hour chart, you might not get it to come all the way back up here. So it doesn't have to, as long as it's obviously trending and I get those signals. But ideally, I like to see the MACD get up to or above the zero line for a short trade. And obviously, if I was looking for a long trade, I'd want to see the MACD drop down or at or below the zero line, because that just gives you the better risk to reward ratio. If we go over to like corn, so this is corn, which I'm not actively trading, but it's one that I'm looking at. You can see here, this is the 30-minute chart, and you can see there were two short signals, one right here and one right here, that neither one of these got up to the zero line. And this is even on the 30-minute chart, so certainly not on the 1 hour chart either. It's actually really hard to see these signals. So this is one of those assets where I probably would look for entries, on maybe a 15-minute. Even on the 15, we barely got to the zero line on both of these entries, right here and right here. So this is what I'm saying. You have to kind of adjust based on the volatility of the asset, and it's going to be slightly different. So I don't change the settings on the MACD. I'm using the default 12/26/9 settings. It's still the 200 period moving average. I'm still liking to confirm trend on the higher time frame, like the 3 or 4 hour time frame. But my entry time frame and my signal time frame is going to be based on the volatility of the asset. And you can very easily just scroll back and look at where entries would have been and how many times did the MACD get back to the zero line or above it for these shorts, and how many times did a good trade happen where it didn't even get that close. And in this case, you potentially would have missed, 2 trades here. Now, you can just say, well, then you would have missed them. Stick to the 1 hour and you just would have missed these trades. And that's perfectly fine, too. If you really wanted to be strict in your entry criteria, you'd say, I'm not going to take any trades unless it gets to the zero line or above for a short. I just won't take it. If I miss, this one or this one, fine. That's a decision that comes with experience. But, because I'm only looking at a handful of markets, I can pretty what is the best time frame to analyze that asset on in terms of potential entry. And again, I don't want to go any shorter than I have to. I'd prefer to stay around the 30 minute to 1 hour. But, if I have to go slightly lower, then I will. And in this case, this one right here was an excellent entry, even though here on the 30 minute, you can see the MACD didn't even really come close to getting back to the zero line. But this was a great trade. I mean, this thing you could have held. I'm sure this was the overnight session. So this was the day trade overnight and actually kept going the next day. And we got another signal, although this second signal wasn't nearly as good. You can see it was very late. So, it's one of those things where you just have to kind of weigh it. And for this reason alone, looking at this one, because this was such a late signal, it would have got you an entry down here after it pretty much already moved. Well, this is not a good, risk to reward ratio. And this is what I'm saying about, it's okay if you just want to say, look, I'm not going to take any trades unless it at least gets back to the zero line, because the risk to reward might not be that good and it might not be a really impulsive, strong move. Now, in the case of this one right here, even though this was below the zero line, this was a good trade. This one was also below the zero line, but again, if you look at where your entry would have been, it probably would have been on this candle right here, maybe. And, I'm not saying it wouldn't have given you a little profit, but you can see it was certainly not as good as, this one or this one up here, where where the MACD went back above the zero line. So the discipline is important, and just to stick to your rules. And if you miss a couple of trades, you miss them. Now, the other thing is, if you don't mind holding your trades overnight like this, then let's say you got in at this one, well, then it wouldn't have mattered about all these signals right here, because you would have just held these things. You would have just held this trade all the way down. You got your impulsive move during the day, your overnight session sideways, impulsive move during the day, overnight session sideways, impulsive move during the day, overnight session sideways, and now we look like maybe we've bottomed out here, at least in the short term. So, that's something to consider too, that if you take these really much higher probability trades and you don't mind holding them, then you can potentially hold these trades through multiple sessions because your entry was so good to begin with. And then, maybe you can trail a stop, as you get into profit, So, maybe once you break this leg, you move your stop from up here all the way up to here, and maybe just trail your stop. After this day, maybe you trail your stop to here, and then you get this leg down, and so on and so forth. So there's different strategies you can use to kind of mitigate your risk as you get into profit, and, lock in some profits or at least get to break even. So, but again, each market's a little bit different. So I'm looking at, I'm just starting to just gaze at corn a little bit, and the other one, just for a laugh, is this is lean hogs. So it's basically the pork market here, and this is another one that I'm kind of looking at doing here too. And so we'll see. But primarily, I'm still concentrating on S&P and Nasdaq, oil and natural gas, which are the ones up here in the front. And again, I just added on corn and lean hogs to look at. These other ones in here are just the out-month contracts for for S&P and Nasdaq and natural gas and oil, because we're heading into the time when these contracts are going to roll over. So that's what all these extra ones are in here. And same thing with hogs. This is like December and January, or let's see, February and December. So this is the out month. And then for corn, the same thing. This is March, and then this is the current December one. So that's just why I've got these. They're just different contract months as we get closer to expiration, because futures contracts have expiration dates. So it looks like there's a lot of assets here. There really aren't. There's a total of 1, 2, 3, 4, 5, 6. 6 total markets, just different, looking at different contract months. But only 4 of them I'm still really actively looking at. So we'll see. I tried to look at assets that, move well during the North American session, don't have huge margin requirements as I, begin to get more comfortable with this. And so that's kind of how I pick these. But ones that still have some nice patterns and volatility where you can actually get into a trade if a signal shows up. So I just wanted to point that out. And again, the only other trade I took was an S&P trade, and I closed that one with a very, very slight loss, like 2 points, because it just didn't go anywhere. If I had ended up holding it, I probably would have gotten some profit, but it was moving sideways. Actually, I don't know when I opened that trade. I think maybe I opened it on Monday or Friday last week. No, not Friday, because that was the day after Thanksgiving. There was nothing go. So I opened it Monday, and it didn't move for 2 days. So I closed it actually last night for, like I said, a very, very small loss. But I'm fine with that. And those are the only 2 trades I took this week so far, and I may not take another one. We'll see. So in terms of news and upcoming events, if you look at oil just briefly, oil is, this is the hourly chart, has been, as you can see, has been moving sideways. Basically for about the last week, it's been trading inside this range. And from a fundamental standpoint, the reason why this is probably happening is because OPEC was supposed to meet last week to talk about production cuts. They delayed that meeting until tomorrow, so that meeting is actually happening tomorrow. And there's been a lot of confusion in the news about whether they're going to get more cuts. Some of the countries that are part of that have said they don't want to cut anymore, but Saudi Arabia and the big countries are pushing them to make cuts to push these prices back up, because you can see, this price has been trending down here for quite a while. So because of that, that uncertainty of that meeting, this is why we're seeing this choppiness in this asset. And so I don't suspect that this is going to change until there's output from that meeting tomorrow. And then kind of, what comes out of that meeting, I think will set the stage for whether we, begin, if they get agreement on more cuts, kind of more broadly across more countries and into next year, we probably will see oil start to push higher. But if there's any uncertainty there, or the other countries push back and don't want to make any further cuts, I think we'll continue the downtrend. And this is kind of the technical area. I'm looking at this yellow line, which is the last swing high before we made this last low. So as long as price doesn't breach this area decisively, then technically it's still in a downtrend. But again, we're just kind of range trading. So I'm not planning on taking any trades in oil until probably after tomorrow, once the dust settles on their meeting, assuming, I don't know if it's a one-day meeting or not, but it could be longer. But until the dust settles on that, I'm not interested in oil. I'm just kind of watching this range. I'm watching this as a key technical level here on the 4-hour chart. It's still below the moving average, but this is a key swing area. And if it does break above here, probably will breach the moving average anyways, and then we would potentially have a change in trend to the upside. But for now, I'm just not touching it. Natural gas is really fully dependent on, especially this time of year, well, not fully, but it's largely dependent on weather and forecasts for inventory. And right now, everything's pretty stable, so the price has just been trending lower. But if there's any disruption to that, or super cold weather, that would push natural gas up. Now, whether that's a trend change or just a correction to the downtrend, who knows. So, and then for the S&P and Nasdaq, it's the usual, just economic drivers, the market just waiting on economic news. But the S&P and Nasdaq do remain in bullish trends either way for now. So, but anyways, oil is the main fundamental piece I'm looking at right now. So anyways, guys, I'll leave it there, and just wanted to give you a quick update, since this is the first trading video since I announced that I've stepped away from Forex. And like I said, it's been a little cathartic experience, not having to sit there and stare at 15 or 20 Forex charts and, be compelled to take multiple trades every day, which is what I was doing. And, even though I was making a little bit of progress, I just wasn't happy with trading so much. And for whatever reason in these futures markets, yes, I'm looking at less markets, but I've just, really determined to just stick to the rules And if I miss a trade, I miss a trade, and really just not dive down to those really short time frames and try to conjure up some trade that's not really there and end up suffering a loss. It's just not worth it. And again, I'm already up 5 or 6% this week, so if I don't take another trade this week, I'm okay with that. My account still grew, at a nice clip, just with that one nice trade, and I'm fine. If I get another one, great. If I don't, so be it. So my mindset is really changing, but I'm fighting against myself also in the the FOMO part and feeling like I have to be in the market. But for whatever reason, I seem to be more disciplined with this, and so I'm determined to stick with it. And so far, so good. All right, guys, so I'll leave it there. Questions, comments, please leave them down below. Smash that like button. Really appreciate it. And if you're just finding the channel for the first time, hit that subscribe and ring that bell notification for when I make new content, which is not often, once or twice a week maybe. I don't sell anything. I'm not looking to monetize my channel. I don't sell a course. I don't do anything like that. It's strictly just my machinations in the market and my opinion on a couple of things, and take it for what it's worth. But it's not trading advice. Make your own decisions. I just kind of point out what I'm seeing and what I'm looking for before I enter anything. All right, guys, take care. Have a great rest of the day, and we'll be back soon.